I'm very lucky to have with me a good friend and business partner in the respect of David Encell, who is the MD of Profit Group. What I wonder if, David, you'd be kind enough is for those that don't know of you or the Profit Group, would you be kind enough to give a brief overview?
Yeah, sure. Yeah, well, it's good to be here. Thanks for the invitation, Dan. It's
Welcome.
yeah, I mean, we'd say we've known each other for many years now, but Profit is essentially a business that provides support to businesses to manage their trade credit risks. Our core business has always been that of trade credit insurance brokers. We're a specialist broker. But over the years, we've tried to evolve the business and distinguish ourselves a little bit from our peer group by offering other services, credit reports, and debt recovery. So we sort of profess to offer a bit of a one-call service to clients and to businesses in the UK, so that it's a bit of a cradle-to-grave solution that we offer, and I think that sets us apart from the majority, if not all of our peer group. But we're a boutique business. It's not we're not into volume. We provide a very, very high level of service as far as we're concerned. That's always a very intangible thing, of course. But we pride ourselves on the closeness of the relationship we have with clients, and the fact that that they can come to us for a multitude of solutions. Really,
we say that we've known each other a while. I think we were saying the other day, weren't we? 2005 odd is when we first started to work together.
That's about right.
Would you be kind enough to explain to anybody listening how we work together?
Well, as I mentioned just there, one of the services that we provide is access to credit reports, and we started doing that in exactly as you say, 2005. And why did we start doing that? Well, because at the time we were talking, and we found out that a lot of clients didn't have a very joined up solution for credit reports. The market was very fragmented. There was a long list of providers of credit information. Many of them sort of sector specific. I remember the boot, shoe and leather manufacturers association in Northampton, which of course served that sector. So a lot of them were just sector specific, but the market seemed limited and not easy to navigate. So we decided to try and offer our clients a solution where they could buy from us pay-as-you-go reports, and that's how we started doing that, really. And that's evolved, as you know, from us providing reports of our own type and design to effectively partnering with you guys. And that's how we serve our clients. Well, we provided reports. We want to provide reports because essentially they can be used under a credit insurance policy. That was my first motivation. They have an application under a credit insurance policy, just as debt recovery has an application at the back end when people, of course, don't get paid, and people they pass those debts to us to be collected, and we can do that within a team that has a breadth of knowledge across a range of different services, and it works. It all works.
So the hot topic at the minute is obviously COVID-19 and coronavirus. We're being hit with daily announcements and I was going to say changes, but I suppose only minor changes realistically at the minute, which maybe is a good thing, maybe not. And I think we're all starting to maybe see that, certainly in the press, that the economy is starting to be maybe given a platform to start coming back to some sort of new normal. How have you found COVID has affected your business, from your team's basis and your customers?
Well, from an operational point of view, of course, we've been working from home since the last week in March, and the degree that the extent to which it's been relatively straightforward is testament to the fact that I've always tried to make the operation as paperless as possible, I suppose. So
Right.
we have systems. We have cloud-based solutions for our debt recovery. We have, of course, the reports
Yeah.
that we share with you guys is all web-based, and we have a document management system. I'm quite used to working from home. And I suppose there's on that basis, we're fortunate, maybe more fortunate than a lot of businesses, that we can carry on operating efficiently remotely for some considerable time. It's just social interaction that I think people are missing more than anything else, and having the opportunity to just sort of meet and greet and chat amongst a team. That's the problem.
Yeah.
From in terms of how this has impacted our business and our clients, that's a much more significant issue, really. And we had a fairly quiet initial couple of weeks in April, and we saw things begin to ramp up, because what's happened is that people have gone into lockdown mode. Obviously, they've said, we can't pay, we don't want to pay. Everybody talked about cash, didn't they? Everyone said we need to protect cash. That's the one thing that we need to look after. Businesses don't go bust because they don't make a profit. Businesses go bust because they're out of cash.
Mm.
So everybody was focusing on cash. So it came as no surprise that we went fairly quiet. Our debt recovery clients weren't giving us new instructions, because what's the point? The court system's still going in a sense, but of course, enforcement officers can't attend premises, so that it grinds to a halt at some point in the process.
Yeah.
Court hearings are not taking place in the usual way, so it's impacted on everything, really. Insurance companies have responded as well, so that they've recognised that there's going to be a delay in payments. So what we saw was insurers relaxing the rules around reporting of late payers, really.
In what way?
Well, insurance comes with rules, doesn't it? It always does, and
well, you've got to follow a process, and you've got to have,
yeah.
in order to be able to validate your policy, you've got to have followed these, and those rules have become relaxed. Is that?
Yeah, there's been no change to the point at which, I mean, credit insurance is a pretty liberal. I mean, credit insurance covers insolvency and default. So basically, our customers are providing their goods and services on credit, and they hope to get paid at some future date. And you've got two fundamental risks that are insured. One is the insolvency of the end customer. The other is what we call default or protracted default, and that's non-payment for reasons other than the customer going bust.
Yeah.
But it comes with rules. It's a pretty liberal product. Everybody gets the fact that no one pays on time. And so credit insurance does allow a period of time after a due date has arrived for a customer to pay our client. That's not that sort of on stop date, so to speak, hasn't altered, but the period of time after that on stop and before which the insurer needs to be notified has been extended. And I think insurers recognise the fact that people need more time to pay. It's the time that the insurers allow before they become that's changed.
Yeah, and from my background in the industry, in terms of credit reports with CoCredo, we're going against, we're absorbing a lot of public data along with third-party information, etc. But my experience would say that the credit insurers have even more access to data to a certain extent, because of the fact that they can sometimes get management accounts directly with the company. And there's, am I right in thinking that for those people?
Yeah, that was a big, you're absolutely bang on. I mean, that was a big lesson of what happened in 2008, 2009. And that's where I think insurers this time, although this is going to be really painful for insurers, there's no doubt about that.
Because they're going to have to pay out a lot, because there's going to be a lot more insolvencies.
Absolutely.
Right.
Yeah. And whether it's insolvencies or whether it's defaults, whether it's just those people not paying, subject of legal action and what have you. There's no question that this is going to be painful for all of insurance, and credit insurance is no different. But in many ways, I think the view is that credit insurers are better placed in terms of their understanding of risks than they were 12 years ago. When we walked into the financial crisis in 2008, 2009, banking crisis, I think it's fair to say that over a long period of time, a lot of insurers have built up a lot of exposure to risk they didn't really understand.
Okay.
They weren't reviewing that information quickly enough. They were relying on publicly available information, and they weren't recycling that and refreshing it,
Doing their own analysis. And
yeah, and there's something that we refer to as negative vetting, where a business could apply to an insurer for a credit limit, and very often up to a certain level, if the insurer didn't have anything adverse about that, that limit would get approved almost without question.
really?
So they weren't understanding a lot of the risks they were writing, and that was a big lesson learned. And we've moved on a great deal, and it was a big criticism of the insurance market that in 2008-9, a lot of cover was just completely wiped because they had to. They didn't understand what they were writing and what exposures they had. And they've moved a long way in those times. So we now have, insurers now offer some greater certainty of cover. We have notice periods before reductions or cancellations take effect, that kind of thing. Even in some cases, a lot more non-cancelable credit limits these days than we had prior to 2008-9.
Right.
And market's learned its lesson. It's certainly learned that it needs to be in closer contact with its risks and get, as you say, get that management information on a much more regular basis. And that's why I think it's generally better placed to handle this. But information is absolutely key. And we're here in the middle of May. And probably in certain sectors, any information that's got 2019 at the end of it is too old now. It's just not considered current enough.
Right. But then at the same point, with filing laws at Companies House and that type of thing being extended,
yeah,
it's almost working. More micro companies than not. 98% of companies filing as micro entities at the minute. There's even less data available that is in that window, like you say, January onwards.
Yeah. The filing extension won't help, and it will help businesses, but it won't help insurers, and it will just refocus and draw even more attention to the fact that the businesses themselves need to front up and provide information to insurers. Something that a lot of businesses, I've got clients of ours who pre-2008 absolutely refused point blank to provide any credit insurer with any management information.
Okay.
But they've had to. They just learned at that time they had to survive.
Yeah.
Because credit insurance is absolutely key to the whole cycle, really. And insurers always want to be regarded as a real stakeholder alongside the banks and alongside funders, and too often is the case that they're not really.
I'll be completely honest. I was doing my homework before speaking to you today, and in all the years I've known you, and all the I suppose relations that we've had with the credit insurers, we work with all or most of them, and what I've never seen before today is that actually the benefit, I suppose, of credit insurance, if I'd be right in saying, David, is that you also have the ability to wipe any bad debt provision in your accounts because of the fact that you're providing, or would I be right in saying lower it? I don't know. That came up
I think you can fix it. A lot of people just use premium as their provision and maybe a little bit more for an excess on the policy. So I think, yes.
You put it in as that basis. That is your bad debt provision. That's the cost of bad debt.
Yeah.
Okay.
So and you can do that, and you can write it back more quickly as well. So a lot of people use the cost of the premium cost itself as their provision. They all policies
can it against that.
Put a bit on as well, but it does actually enable them to do that. You're right.
Yeah, it makes sense. Which the bad debt provision is a provision. It's not a definite, I suppose, because you don't know how much exactly bad debt you're going to get.
Often used to save tax.
Is that right?
Make a provision and you pay. It reduces your profit, so you pay less tax, but you've got to write it back at some point or write it off.
Yeah, because then you've got the next year's worth of accounts, and yeah, okay.
Yeah.
One of the things that we have been looking at as a business is, and probably a lot of businesses, is is our product or is our service been affected by COVID? And if it has, what can we learn from this to go forward and avoid or minimize the risks that have been associated to it at the minute or over the last 8 weeks? And one of the things I think that I've heard quite a lot is about terms and conditions. So, having pandemic based terms in your policies, in your website terms of use or whatever it may be, because it's not until something happens to you that you learn, and then you can do something about it to avoid it in the future. Are you seeing that the certain policies are being adapted to encourage that, or to limit that happening in the future? Is there any change?
We had one or two clients ring up very early in this process, if that's the word, end of March, April time, saying, "Is there any sort of force majeure clause in my credit insurance policy?" There are force majeure clauses in policies, but they don't obviate the fact that the risk insured is insolvency or default. If either of those two causes of loss occur, then covers effective. And I don't see how that can change. There's nothing that insurers can do in the trade credit market to introduce clauses which would preclude cover for insolvency and default. It's just it is the risk that
but
people.
If they're defaulting because of the fact that they've shut their doors for the time being, maybe that creates the longevity of that business because of the fact that they've got very minimal costs. Maybe all the staff are furloughed, I don't know, and they're not bringing any sales, but obviously their costs have massively reduced as well. Excuse me.
Yeah, and some insurers will be seeing the benefit of that as well, because you think about all the insurers. I mean, predominantly our insurance market's based in central London, so with one notable exception, Atradius, who of course are headquartered in Cardiff, but most of our insurance market is in the square mile.
Yeah,
and I know one of them has quoted me that the cost per bum, so to speak, of being on Leadenhall Street is £20,000 per bum. Well, if you've got a few hundred people in an office on Leadenhall Street that are now working from home, it soon adds up, doesn't it? So
yeah,
it'll be saving a lot of money through having people in the longer term working remotely, which I think is quite possibly where we'll see this will all end up.
Much more acceptable.
Yeah, but you're right. Again, it comes back to preservation of cash. A lot of businesses are not incurring costs; they're not buying anything still.
Yeah,
and I think that the acid test for insurers who have removed a lot of insurance cover over the last month or so, that they've identified what they call, what they consider to be red sectors, ones that are materially affected by this. So the obvious ones: hospitality, catering, leisure, aviation, construction to a great degree. Those sectors were identified very quickly by insurers as being high risk. And then and then they looked at businesses within those sectors and subsectors and identified those and removed a lot of cover. If you take a grading system of 1 to 10, where 10 is a business that's bust, they all operate on a grading system of some sort, and the higher the number, the greater the risk. So a lot insurers generally took action in the higher risk grades in the sectors. But not just because they were trying to necessarily avoid claims, but because they wanted to understand the risk a bit better. And a lot of it was on the premise that, well, our policyholders don't need cover on those businesses at the moment because those businesses are closed and not being supplied.
They're paused.
Yeah, exactly. The real test for insurers will be what happens when the lights begin to get turned back on these businesses return and start ordering from suppliers, from our clients again. And that all the more important will be then focus on have they paid what they owed for supplies prior to lockdown, and how they got through it. So that's the real test. I don't think insurers can be criticised for what they've done so far too much, but if they're not careful, insurers will come in for criticism. I think if they are slow in restoring cover where it's warranted, and again that comes back to the provision of information. It comes back to businesses supplying information, giving insurers updates, and of course now we've got wind of a government-backed scheme for insurers that will give hope to that process in the months to come. I don't think it's anything that's going to happen in the very near term, but it certainly gives some hope to businesses in those red sectors.
What is that? I'm not sure. What I mean, like you say, is it just rumour based at the minute? There's not.
It's beyond the rumour. I mean, we know that there's something. So the Association of British Insurers, the ABI, have led discussions with the government over the last few weeks about the government stepping in and supporting the trade credit insurance market, so that the insurance market can support businesses in certain again high risk sectors more materially affected by lockdown and COVID. My understanding is that there's a lot of information being shared by the ABI and with the government, so that the detail of this scheme can be thrashed out. But I think it's still a number of weeks away before we get a lot of detail. It's by no means certain. I don't think anyone knows whether all insurers can or will participate in the scheme. But I think we need to be, clear that it's more to protect the future removal of insurance cover in those sectors than it is to enable insurers to reinstate what's already been removed.
Yes, I understand.
I mean, the government clearly won't want to pick up the bill for businesses that would have failed anyway and that have maybe just been tipped over by COVID. It's to materially support those businesses whose future viability is reliant upon supply chains which are insured.
Yeah,
we wait and see on that. That's very much a work in progress.
Okay.
But that's and there are similar schemes throughout Europe, but none of them are the same. I mean, Germany, the Netherlands, Belgium, France, I think they've all got their own schemes. But even across the EU, they're all different schemes. There's no blueprint for this, and there will be a cost to insurers because the government will want something for that risk. And in Germany, I think something like 2/3 of the premium is being ceded to the government in consideration for its support. So there is a cost to the insurance market. We don't know enough yet, Dan, to be fair, but it's very much one we can all learn from the experiences, good and bad, of others. And as we come out of lockdown, clearly there's a focus on what's happened in Germany and what's happened in Austria and
Has been second spike
slightly ahead of us. And clearly, I suppose being later in the chain has some advantages because you can watch and monitor what happens to their economies as they emerge from lockdown. But I think getting the workforce back is going to be a real challenge because schools are going to be closed for a while, aren't they? Nurseries are going to be closed for a while. So all our employees, all the employees of our clients who have children are all going to be affected by this for some time. And people need confidence. And they need to have the confidence that it's safe to return. I mean, we're I used the term earlier on. We're a boutique business. We have a relatively small team in a relatively decent sized office, and I'm really thinking about getting people back in within a couple of weeks on a rota basis, just to sort of get back into the routine of working.
I think
it's going to be a slow. It's going to be a slow return to anything like what we used to know.
Yeah.
And I you know, we are here for the foreseeable future. I'm sure. And
Yeah.
remote working is not something that everybody can do. As I said at the top, you know, it works for us. It works for you guys to a degree, because you know we have the IT. We're not paper-based businesses, but you know, how does a manufacturing business get back to normal? I mean, some of our clients have shown remarkable initiative. I mean, one of them started manufacturing. One of our mutual clients actually has started manufacturing upright hands-free sanitizer dispensers. So we just ordered 20 of those.
Yeah.
For the offices. So you know, it's great to see people displaying, you know, and you know, deploying their skills in other areas that suit the times. But
yeah.
they want to get back to core as soon as they possibly can. It's not going to happen quickly, though, is it? I don't think.
So I mean, it's maybe a tricky question, but I'm going to throw it out there. What not just from the credit insurance industry, but as a business owner, maybe even from a father's point of view, you know, what lessons do you think, if you look back, a reflection over the last 8 weeks, is there any lessons that you think, do you know what, actually I've learned from this process? Is there anything that you'd be kind enough to share with us? Putting you on the spot, I appreciate it.
I guess the simple answer is be open and talk and just remain in regular contact with people, because that's the answer. You can't do it all by yourself, can you?
No, I think it's great advice. I think, you know, that there definitely has it's definitely a good thing to do, to be able to be more open, talk to more to people, rather than just keeping things, you know, there'll be certain things you keep close to your chest, but
it's counterintuitive, isn't it, when everyone's working from home? You think that people would talk more, you know, but it's counterintuitive to not do that when everyone's working from a remote location. But you know, I know a lot of our clients, you know, they have regular quizzes. Some of our colleagues across the wider group, you know, they have online quizzes. They have fancy dress days. They just get together. Even you know, my eldest kids, you know, they socialize online. They have cocktail. Doing it, but they're being forced to do it. So it's counterintuitive to talk to people when you're remote and when you're not seeing people. But I think it's the way forward. You've got to do it.
Yeah, I hope that stays with us. That's one of the good things that comes out of this, that we can continue to do this, and we don't, like you say, you know, don't go back and we forget that what it was like, and then we start to get back into our old habits. So
yeah, I think, you know, Boris is saying today that, you know, he wants to encourage people to have a healthy lifestyle, a healthy diet, more exercise more. Let's talk about bicycle usage and you know, again, something that's counterintuitive: avoid public transport, particularly at busy times. But you know, if there is something good to come out of this, it will be that people engage in a different way, and you know, take more exercise, eat, you know, look after themselves better than otherwise they and we do revert to type maybe too quickly sometimes, but yeah, there'll be some goods. There'll be some good, but let's see. I certainly think that remote working or people can be much more efficient, can't they? You know, you and I can have a meeting online here. I mean, you and I are over 200 miles apart at best of times. So if you can engage with me or your clients in our area by these means, how more efficient does that make you? It's good to see people, and that hopefully will never go away completely. But the ability to engage with me like this and share screens and talk about things. And you know, we're doing that more and more with clients now. I'm thinking, oh, I need to catch up with X, Y, Z, and so you know, we've got Teams meetings with clients that we've never had those kinds of meetings before. But you've got to change your way. You've got to change your means of operating, really. And I think some of that will stick. Some of it will stick.
Yeah, that'll be the new normal.
Yes.
So on that note, thank you very much for your time. I've really learned a lot, so thank you very much. It's probably questions that I've never
it's good. It's
had the
good
time
to
to
talk
ask you as
well.
So thank you ever so much for that.
Great to talk to you, Dan. Thank you very much indeed.
And you.